Good afternoon. Sorry I'm late. It's 5 minutes late. First afternoon back and I'm late. Sorry about that. How are we all doing? Afternoon, Steve, Callum, Judge. That's a new one. Can't say that one. Oi Can Yang. I don't know. Afternoon. Right. So today, it's my first New York session back. Was back yesterday. We're going to have a look at the ADRs, RSIs, usual stuff, go through the news, and trade the open. Lovely moves this morning. We've obviously had a lot of volatility over the last few days, specifically in the stock markets with the indices collapsing. Well, not so much collapsing, but obviously, as you can see, everything's had a big downward move. This morning with the DAX, we had two really nice breaks. SIH or ORB, whichever. Really nice clean break down on the DAX, straight down to 3R. So I took 3R and 1R on the second position on that. And the FTSE clean breaks there as well. So straight down, took 2R and 2R on that. Could have had 3, but decided to get out when this looked like it was double bottoming, but it didn't. So yeah. Very nice clean breaks today so far. So let's hope the New York session is the same. We'll have a look at that in a minute when it opens. But obviously been an awful lot of volatility last couple of days. So we'll see what happens. Typically after you have these sorts of moves, especially like the moves we had yesterday, where we had, this crazy move, which kind of started and then ended very, very quick. When you get these crazy moves that we get in the markets, you tend to have a bit of a quiet day afterwards because the market's in shock, readjusting. So we'll see what happens today at the open. It may be big, maybe small. Today's news, we've had the Aussie cash rate came out this morning at 4.35. Monetary policy statement said they were unhappy with the stickiness of the CPI numbers. So there's no short-term decision to change interest rates coming up. Unlikely it's going to be this year. And first rate change potentially sort of first quarter, maybe second quarter 2025. So that is overall bullish for the Australian dollar. There's no forecast drop in interest rates, so no bearishness forecast. It was factored in and there was no shock. So this basically just is a kind of as expected news result this morning. So if you look at the Aussie pairs, we've had a little bit of a push up this morning on the news and pull back on the Aussie CAD. Aussie Swiss, nothing. Aussie New Zealand, a little bit more of a spike on that one because New Zealand dollar's obviously affected too. But yeah, so nothing dramatic. We've had an ADR hit on Aussie US. So that was the news this morning. The press conference, there was nothing exciting said. There's your news. Press conference, nothing really came out of that of any interest. There's Bullock saying basically rate cut is not on the agenda near term. CPI is not tracking with forecasts. They'll raise it. So the usual stuff. So nothing particularly exciting came out of that at all. Other than that, this morning, not a lot. We've had the Canadian trade balances and US trade balances, but that's it. So there's nothing exciting today, news-wise, apart from that. This evening, we've got the New Zealand unemployment rate. That is forecast to go up, which will make the New Zealand dollar bearish. So if we get anything above a 4.3, we'll probably see a downward move in the New Zealand dollar at market open. And obviously anything against New Zealand dollar going the opposite direction. So we'll see what happens. Afternoon, AZ. Fletch, how we doing? So, so that's this morning's news and obviously what we've got coming up later today. Very little news tomorrow. What's the time? We've got 6 minutes to the open. So obviously yesterday we had all these crazy moves. We had 300 ADR moves all over the place. The ADR dashboard, as you can see, this was lit up like a Christmas tree yesterday. 225s, 200s, 175s, all over the place. Obviously, it's Tuesday today, and it's only the 6th of the month. We've only had 4 trading days this month. And as you can see, we've already done 175% of the total monthly range of some of these instruments yesterday. So the moves yesterday have completely skewed all of this data. So anything this week is pretty much unusable. This month potentially is unusable as well. And as I said in the live room yesterday, with the vast majority of these moves, we've seen V-shaped recoveries and A-shaped recoveries. So this was just a knee-jerk reaction, which is completely undone. So if you look at a lot of these moves that we had yesterday, which were the fallout of what's going on in the stock market with what was going on in the Middle East with potential conflict breaking out, we've completely done the A-shaped, V-shaped recoveries, which I said about. I didn't take any of these yesterday. I wanted to see the market do what it needed to do yesterday when it's done it. So back to basically square one now. So this was not news. This was just a knee-jerk reaction. If you look at a lot of these, especially on the 4-hour charts, there's a lot of exhaustion candle potentials here. So when we get big rallies coming to an end, we tend to get an exhaustion move, which is basically the market pushing up, trying to find orders to get filled. It can't find any liquidity, so it pushes higher and higher and higher until basically they can't fill the orders, and then we come back down again. So these tend to be the start of a reversal a lot of the time. This was completely against fundamentals as well. Obviously, with this one particularly, the euro is short, the Aussie is long. There's absolutely no reason for that move, which is what I said yesterday in the live rooms. These moves that we got yesterday were completely against fundamentals, which is why I was expecting them to completely unravel. But I just wanted to wait and see what happens. Obviously, I've been off for a week, so I wanted to wait and see what happens when the market played out yesterday. 3 minutes to the open. So this morning or this afternoon, depending where you live, we'll have a look through these ADRs, what's happened today with the New Zealand dollar and the pound. The weeklies, there's not really a lot you can do with these. If you look at all of these weeklies on the Aussie dollar CAD, you know, this is the weekly range. The weekly range of the Aussie CAD is 101. Yeah, we put in yesterday 185. Yeah, so, you know, we did 200% of its average weekly range in literally 2 hours. So, you know, everything this week is screwed. Yeah, you can't use any indicators. Every indicator you have, ADR, moving averages, oscillators, any indicator you're using at the moment is giving you false readings. So everything is basically screwed. So this is why I kind of want to give it, after these moves yesterday, a day or two to normalize, rationalize, reset. And then we could start obviously looking for movements from there. So all over the place. But if anybody did take these yesterday from the live room, well done. They all played out. You could have made an awful lot of money. But as I said yesterday, it could have been an awful big risk. So big loss. So be careful with those sorts of moves. Right. Market is opening in 1 minute 20. So there's no other news this morning. No other news this afternoon scheduled. So it's clear, basically, moves for the rest of today. We will see where we go at the open. So looking at the NAS, S&P and the Dow, obviously we had that big reaction yesterday, beautiful W pattern reversal. So we're basically back up and retested the low from Friday this morning in Globex and rejected. So it does look like the market wants to remain bear. We got 50% retracement on the move yesterday from the Dow and about 70% retracement on the S&P. So far in Globex, we haven't made any progress, but as you can see, market's really weak. So I'm hoping for some quick, fast opens today. Although the ranges, yeah, this should be okay. So looks like it's going to take pre-market 5 ranges today. We'll see where we go at the open. Afternoon, George, Neo. Free AGB, morning of XR update.news. What? Wild day yesterday, got crushed. Quite hard to get crushed yesterday, wasn't it? Only went one way. Tra-la-la. I took them 5.8% profit. Very good. Yeah, if it had been a normal week, I probably would have taken them, but I didn't because I was back from holiday, adjusting, and obviously market's in an absolute mess at the moment. So I wanted to wait and see what happens with the missile attacks, everything basically. The trouble is, if you start trying to take those reversions, and all of a sudden, let's say, for example, this one where we got this massive move on the Aussie dollar CAD, we had a lovely hourly push, lovely entry there or entry on the pullback, absolutely brilliant. If a missile had shot into Israel and killed a load of people, that thing would be down another 300 ADR. Yeah. So this reaction is a combination of multiple world events, financial events, everything all coming together at once, and you can never tell. It's a massive money-making opportunity, but it's always got to be done with a stop, that type of trade, not a position trade. Short on the Dow. Nasdaq's a bit quiet at the open. Inside bar on the S&P. So far this morning on SIH strategy up just under $1,000. We can get a clean sweep today, that'd be nice. Still in EA, not even close to break even. We'll have a look at that in a sec. Euro what's been coming down nice today. Oh, sorry, it's yesterday, yeah. Yeah, so you just about got the reversal alert there. Just about, but it's holding. So, the fundamentals on this, the Euro's dropping rates, they've indicated that there's going to be an acceleration in rate drop. Aussies confirmed this morning they're not dropping rates. Bullish. That's definitely bearish. The bias is definitely that. It's just taking a long time to do it. No. This move that we've had here is just odd. There's no other way to put it. There's absolutely no reason for that from a fundamental basis. There's just no reason for it, but it's done it. So it'll correct. As I said again yesterday, a lot of these moves yesterday that we got, these 300 ADR moves, hit yearly highs. A lot of these hit that yearly high last year. So that's limit order triggers at the yearly highs. There's always limits at the yearlies. Whether or not they hold, that's the question. But the fundamentals are obviously pointing that way. So no reason why it shouldn't. Long on the S&P, long on the Nasdaq. Dow didn't manage to get a breakout. See where we go. Afternoon, Ferdinio. I didn't actually know it would have such an impact on Aussie CAD. I shut down only yen and Swiss. Yeah, I'm not. I'm putting a Swiss back into my portfolio. I haven't decided which yet. But I'm going to put one back in. Yen at the moment, though, I'm not interested. Not interested at all. Trying to get in on a pullback. I mean, now is where you want to get in on a pullback, but look at the potential upsides on this thing. And if you're going to mean revert it, you want to stand in front of that. Just yen at the moment is unreadable from a fundamental perspective and from a everything perspective. It's just there's institutions all over the place now. It's US dollar yen is traded and has been traded for many years as a carry trade, and particularly part of pension fund portfolios. It's part of the risk profile for pension fund portfolios a lot of the time, the US yen, because it's not guaranteed to make money, but it's hard not to. It's a bit like a stock index, and it goes up most of the time. There's a lot of funds very underwater on this. So if the Japanese keep buying it up and reduce those overseas bond purchases, I don't know where the floor is in it. So it's very difficult to trade at the moment. But if you look at measured moves, That's the wrong one. Haven't got my, anyway, do it the fib. So if you look at measured moves, we got a 61.8 pullback on that previous intervention move. This intervention move started there. And we've had so far more than, it's almost 100% retracement on it. I mean, some people might look at it as that being the move, in which case we're back at 61.8 again. So when you look at the previous intervention move, and this, if you class that as it, that's the pullback done. However, at that point there, the US dollar were not turning around and saying we're dropping 1.25% on the interest rates and going into recession. Now they are. So it's very, very difficult to read direction on that US dollar yen. But that's off my portfolio pretty much permanently at the moment. Okay, so no break on the NAS or the S&P so far. We'll have a look at the FX in a minute. Just want to see where this goes. Afternoon, Mimo, Abdi, Chucks. Hedge for the NASDAQ. So NAS, downside hedge. Are we going to get another collapse like this? I don't think we are. So downside hedge, I'm going to put at ADR. I'll see how fast it goes, though. If this thing starts taking off, I will extend it. But I go for an ADR to the downside. Upside, higher day looks good. So look for some limited triggers at higher day today. It's going to be a triple hedge today, isn't it? Fantastic. You get 2 clean breaks in the morning and 3 hedges in the afternoon. Thanks, market. Dow, just going to go for ADR, which is basically Friday's low, which is that double bottom. So looking for that to be upside resistance. So they'll be selling the low from Friday, selling last week's low. Downside, yesterday's low. And we got a monthly low there, haven't we? Two-month low. It's not a bad level, is it? So we know there is buyers at that level, which is 125 ADR. I'm going to go for ADR downside. Bit of a crappy open today. S&P, we will see. So got 500 hedged in. If we can get a clean break on the S&P to the upside, that will pay for the hedges, and I'll just take the 2 this morning, which would be nice. Come back to that in a minute. It's not going anywhere. Right. So, ADRs today. Excuse me. RSIs, there's not a lot of point in going through RSIs today. So yesterday, this was lit up like an absolute Christmas tree. We looked at, if you go and look at yesterday's live stream, I showed all the dashboards right at the beginning of the live stream. Pretty much everything was red or green. It was lit up fully because obviously yesterday we had all this massive volatility. That's not yesterday because that's the 4-hour chart. We had all this massive volatility going in. Virtually everything hit ADR yesterday. I'm not sure if there wasn't anything that didn't hit ADR. Pretty much everything did, or exceeded it by 200 to 300%. So massive slippage day. Pretty much everything got extended to some degree. So again, with the RSIs, letting everything kind of reset. Most of the stuff has recovered, obviously, done the complete 100% U-turn as it usually does. So there's a few bits and pieces which haven't. That's pushing up a little bit further, but all these RSIs at the moment, most of them have completely undone. So if you did take any trades yesterday based on RSI extension, they were probably already extended from previous day, because the move yesterday just continued Friday's direction. So there wouldn't have been really any new entries signals yesterday. It would have already signaled at some point previously. As you can see, we had these, it's absolutely parabolic, kind of 48 hours stroke 3 days. Everything's gone parabolic. Yeah. Total chaos and panic in the market. So there are a few RSI extensions, but nothing that I'm interested in getting into until this thing's kind of reset itself a little bit, a couple of days. So I'm moving over to 80-20 RSI on the 4 hour, and I'll be trading that from now on. So I'm switching away from hourly charts over to the 4 hour, because the volatility is obviously going to start to pick up a little bit now, I think. Even though we're going into summer trading is usually fairly quiet. However, summer trading usually doesn't have the start of an interest rate collapse, which is what we're about to experience, which is going to be equivalent to the interest rate rally that we saw in 2022 into 2023. So it's going to be the inverse of that. So I'm expecting a fair decent amount of volatility as those interest rates are announced and we carry on going. So I'm switching over to the 4 hour RSI, because the only reason I was on the hourly RSI was basically because volatility, as you know, if you've been coming in here for any amount of time, was at the lowest point we've been in the last 20 years. So we needed more signals. Therefore, 4 hour RSIs weren't signaling very often because we weren't getting enough movement. Hourlies were where we wanted to be. But that's all changing. And as last month showed, getting in too early to moves and squeeze is very painful. So switching over to the 4 hour just gets us in that 2 to 3 positions later. And using the 80-20 extensions just means we've pushed an awful lot further before initial entries. So a good example here on the chart, actually, look. There's a 70 RSI extension. There's an 80 RSI extension. Yeah, distance between those two is 2 ADR. So imagine getting into a trade 2 ADR later and taking 2 ADR less movement. You'd have been out on that yesterday. So, so it's just a case of adjusting to market conditions, which is what you have to do every now and again. So I'm not going to go through the RSIs today because there's very little point. We know things have been moving. This market's been on an absolute crazy run. So that move there is 2,209. So that's 4 ADR. 4 ADR. Yeah, literally parabolic. Yeah, one down candle in the entire lot. Nuts. So I'm not going to go through the RSIs today, but ADRs, we've got quite a few. Now, the ADR, I said this yesterday, if you weren't in the live rooms yesterday for the London session, same thing applies. When we go through ADR contraction, wrong chart. So when we go through ADR contraction, as we have been, so that's kind of the average we've had over the last year, probably around about there. So if we go back to March last year, which is there, we would drop down here. You can see that we've dropped. The last 6 months has been below that line. If you go back and trace that line along there, we had a bounce there, bounce there, bounce there, bounce there, bounce there. We dipped below it for like about a month. We bounced. This is going back to 2017. The ADRs and the volatility we've been experiencing for the last 6 months is lowest it's been for 20 years. Yeah. So when you get an ADR expansion, as we are experiencing now, obviously because the ADR indicator is measuring the last 10 days worth of average daily range, you've got a 10-day lag all indicators lag, every single indicator. Whatever you're using as the number, RSI 14, is lagging 14 candles. 20 period moving average is telling you what price was doing 20 candles ago. It's all absolutely useless. Yeah. So ADR 10 is telling you what the average has been over the last 10 days. The last 48 hours, we've had 3 times the average movement. So the ADR indicator takes 3 to 5 days to catch up to give you a proper average. So you can see by all these weekly readings, everything has done more than its weekly range in 24 hours. In fact, in 2 hours, it achieved it all. So you can't take any of this really into account. So anything that's hitting ADRs today is just because of the expanded volatility. And we're using measurements which are obviously a lot lower than normal. So in 3 to 5 days' time, this 64 up here isn't going to be a 64 because that move there was 200 odd pips. This is going to be jumping up over 100. So you're going to get more normalized readings in a few days' time. So be careful with any ADRs. If you are trading ADR reversals, which I know a lot of people are using the market reversal alerts indicator, if you're getting ADR hits, bear in mind this is due to expanded volatility. Yeah? So you got a lovely ADR hit there with a reversal alert, and you've got your W pattern going in now. Lovely long. But that is hit the normal average daily range we've been experiencing for the last 2 weeks. The last 48 hours have not been average. Yeah. So just be a little bit careful with these. Maybe a little bit lower risk for this week. Next week, you'll have a good week's worth of new volatility in there and old volatility. The problem we've got, obviously, is we're now going into summer trading months. We don't know whether that volatility is going to be sustained or whether it's going to drop again. This is part of the problem with trading, which is why we use ADR, because it's dynamic and adjusts to what the market's currently doing. So nice ADR reversal opportunity there for a long on the Aussie dollar CAD. Bias on this one is a long against a short. So the bias is long, so that's a good looking entry. Bear in mind, you've got a little propulsion gap down there, potentially. Probably see that better on the hourly. It's not far off testing, actually. So potentially you could be dropping down into that area and finding the buyers that rebought that area back up again. So bias is correct on that one, so that's a good looking opportunity for a long. Aussie dollar, New Zealand dollar, a lot more volatility on this one because the Aussie and New Zealand moved together. We've had Aussie news, we've got New Zealand news overnight as well. So missed this one. The reversal was already done. There was your reversal and retest this morning. So 100 ADR, straight up into ADR, pull back, reversed. So that one's done and dusted. Aussie US, slow to update today. Aussie US, that's just coming off as well. So again, the bias on this one, long against short. Now we've got that 1.25% drop forecast on the US. We should see continued weakness coming in on that US dollar. So the reversal alert's already happened on that one. Nice W pattern reversal gone in there. Retested it again. So again, you've missed that already. But there's been quite a few opportunities today. Let me just get rid of that ADR. We got a Swiss yen. So again, the Swissies, the Swiss and the yen, both incredibly difficult to trade at the moment. I would just steer clear of them, to be honest. It's just the problem at the moment with the Swiss franc is Jordan's manipulating it as and when they see fit. The Japanese are manipulating the yen, although they don't need to now because they've got it started and got it doing what they want. But the volatility on those two is going to be big and continuously big. Directional bias on them is impossible because at any point in time, if there's any problem anywhere in the world, both of them are going to power up at the same time. You can't pick a direction on it. So that ADR you wouldn't have got into today. It was too quick to come back down again, and it was obviously in the Asian session. So scrap that, leave that alone. Euro Swiss, nice ADR hit today on that one. We're down. We haven't triggered yet. Why is this taking so long to update? Just about to get a reversal alert on that one. So that's ADR there. We didn't. This will be the first reversal alert of the day on this. So just about to get a signal off of 125 ADR for a long on that one. Nice quarter of ADR move back up into there. Euro pound is also hit. That's an upside hit, just triggered, and you're retesting now. So that's a good looking short. So there's your hit to ADR. There's your right shoulder going in. So that's an pattern reversal. Lovely little short there. Straight down. Not really any good targets. Maybe. But bias on this one again is very difficult to call. Euro pound obviously is short against a short. Had our first drop on the pound. Euro's obviously already dropped. Both indicated they've got drops coming. So it's a bear against a bear, which would normally equal a range. So someone explain that. No idea. Some crazy move for no reason whatsoever. So you've obviously got the hourly reversal alert gone in, and it's retesting now as well. So potential M pattern reversal going in on the 5-minute time frame off of ADR, which would be the right shoulder of the hourly reversal. Good confluence. You've also got divergence on RSI. So all it can... No, you haven't. Yes, you have. So you got RSI divergence, which is bearish as well. So lovely confluence there. Beautiful target to the downside. Down here, loads of room. So good looking short opportunity, Euro pound. See what the upside is on that. That's the May this year. Yeah, I mean, it's beautiful bearish confluence all over the place, isn't it? Looking good. Euro pound short. Not sure you're going to get any pound strength, so it's going to need euro weakness to make that work. But good looking potential trade on that euro pound. Good ADR. Euro yen, wouldn't bother with. Euro New Zealand, that's already triggered ADR. I installed an indicator on my chart yesterday, which was meant to plot news events. I can't remember what it's called, but my God, does it constantly makes calls to a website to go and get news information. And every time I updated my chart, it ground to a halt. So I removed it. And I think there's some kind of residual effect on the chart because it still seems to be ridiculously laggy when it's updating for some reason. I don't know why. Anyway, M pattern reversal and a retest. So you've had that one this morning already up at ADR. Pound CAD, all the pound pairs. So we got the pound CAD. That's already hit. You haven't had a reversal alert on that one yet. You would have had a reversal alert there on that candle. So that would have been a reversal there. So this is looking like it's putting in an uneven M pattern reversal. So new low has gone in. So the second entry there will be roughly the same as the first. Nice potential push back up on that one. So that's looking good. Bias on that one obviously is difficult as well. So the pound is bearish. The CAD is also bearish. We're both dropping interest rates. So it's going to be difficult. Whenever you've got a bear against a bear, typically it means it's going to be range bound. However, at the moment for the upcoming months, it's going to be a race to drop interest rates. So whoever starts dropping faster and harder, and it's likely to be the CAD, is the one that is going to go into a trend. So the US dollar is probably going to drop quite hard. The Canadian will drop quite hard with the US dollar, meaning that this is probably going to be slightly more bearish than bullish. Although obviously every news event for the pound that drops CPI or drops interest rates is going to slam it down anyway. So you should really be able to trade this in either direction, but that's a lovely little long opportunity there. If you look on the higher time frame, you've got support potentially coming up here in this area, which is basically 175 ADR. Failing that, you've got that propulsion gap they rebought, which is previous high there. So you've got 225. So if you get in on that ADR reversal and it doesn't work, you've got one half an ADR, another half an ADR away. and that will have been a big, strong drop. You've already extended on the hourly RSI. You'll be getting down to the 20 level by the time you get to there. That'll be absolutely exhausted and ready to pop. So good opportunity for a long on pound CAD. Pound Swiss, again, Swiss I'd be wary of at the moment. It's in absolute beast mode. Risk off, Swiss on. So you trying along against the Swiss franc when there's times of trouble, not interested. The Swissy could just do that. If another missile goes in the Middle East, the Swiss franc's going to power up. If you're on the wrong side of this, you may not get out. It's just not worth it. The Swissy's just stay away from at the moment. I am going to add another Swiss back in to the portfolio, but until this Middle East conflict is sorted, you could be in a lovely trade doing absolutely brilliantly, and all of a sudden one rocket destroys you, literally. So just it's not worth bothering with, in my opinion, at the moment, the Swiss. Same with the yen. We don't know what's going on with the yen, but I do not want to stand in front of this steam train, and trying to get into it is virtually impossible. You need a pullback. It's not doing that. This is not a pullback. This is a flag. In which case, then that's a good entry, but you've missed it by 6 or 7 hours. So if you take a flag break, the problem with flag breaks is, and this is what I always found, I was taught years and years and years ago when I was stock trading, flag break strategies. The problem with flag breaks is, if they are not a flag break and they are just part of a normal pullback, you'll end up just getting stopped out because you never know. The thing with pullbacks is we know that pullbacks typically work on 38, 50 and 70, 61.8 retracements. Yeah. They're fractions of moves. Things with flags is flags can be any size. It could be that big, it could be that big. The flag could be that big in the middle of 2 fib retracements, almost impossible. This is why you need something like the reversal alerts indicator to say, right, well, this is pulled back 23%. Let's take a reversal. But it's very, very difficult. Now, on the yen, very hard to figure out where to get in on this thing. So just steer clear for the minute until we know what the Bank of Japan's up to. Pound New Zealand, ADR hit to the downside. Pound's very weak today. New Zealand dollar, if you're going to get into anything today on the New Zealand dollar, just bear in mind you've got that unemployment rate coming out. They are forecasting weakness in the New Zealand dollar overnight. So if you get that, this is the perfect long opportunity. Yeah, pound long against the New Zealand dollar. If the New Zealand dollar weakens, the pound's going to pop against the New Zealand dollar. So good looking option to get in there. This just about, oh no, it's an ADR, idiot. Yes, is this, you haven't had a reversal on this yet today. So this is going to be the first reversal alert on this one today, which is going to trigger shortly. So you're at ADR basically, next entry long. Obviously with this one, bear in mind you're at the will of the news tomorrow. You've got nice support coming up as well. If this gets to 125 ADR, that'd be a much better level to take last week's low, if it gets there. And all the New Zealand. So all the New Zealand dollars have hit. New Zealand dollar CAD. That was an ADR hit to the upside this morning. Bit of a nasty reverse alert on that. That one's already played out. New Zealand dollar, Swiss and yen, I'd leave. New Zealand dollar, US dollar. That's an ADR hit to the downside. That's just playing out for you now. But you would have been in that already. You'd have had a reversal alert on that one. Here. Then it invalidated. And then you'd have had a second entry there. And it's just invalidated again and given you that entry there. So those are the 3 entries that the indicator's given today. Third one's playing off. But first 2, depending on where you put your stops, obviously, if you're using them, would be playing out as well. And US dollar CAD. So US dollar, obviously, at the minute, likelihood is it's going to go bear and it's going to stay bear for the foreseeable. So part of this move was based off the fact that the Fed have suddenly changed their mind again and gone from we're not changing rates to we are changing rates to we're not changing rates. Now we're going to do it in September to not changing rates. It's going to be 2025 to September. Oh, now we're going to do 1.25%. Oh, hang on a minute. We might do it next week. Yeah, that's how much the Fed has changed this year. We've had about 65,000 forecasts on when the Fed is going to drop rates. And every week it's a different one. And then an hour later, someone else will come out and disagree with them. And that's from inside the Fed. Forget the rest of us. Our opinions, doesn't matter. So good luck with the US dollar. It's coming down. How and when, very difficult. But we've had a lovely run on the US. Not as much on the US dollar CAD, but it's basically going to start to get bearish. The US dollar CAD's probably the hardest one to trade in that respect because they're both bear. So in theory, and I've been milking this thing all year, over and over and over again, and we've just run the yearly highs as well. So that's a lovely reversal there. But obviously things change on a dime at the moment, especially with CPI. If the CPI numbers start to bounce again, they will scrap everything they've said about dropping rates by 1.25 by the end of the year, and they will change their mind and possibly put them up. Yeah, it's changing so quick, which is why I'm not really interested in so much hourly charts now, because this thing is just changing direction. Everything is changing direction too quickly at the moment. And we need some confirmation and continuation on these interest rates. We need to know what's going to go on with them. So I'm waiting for those RSI extensions on the 4 hour, which are going to be a lot safer to trade over the next 6 months. So today, though, beautiful 5-minute reversal alert off of ADR, textbook, straight up into ADR, 3-bar reversal, retest, down. Perfect. But you missed it. You'd have to take it earlier on. So there you go. So those are our ADRs today. Hedged on all three. I knew it. One of those days. So S&P hedge. It just triggered me. Look at that. Typical. So market is pulling back. So much for it feeling weak today. So target on the S&P is going to be pretty much the same as the Nasdaq's target. Roughly low from Friday. And downside, perfect. Yesterday's low. So we'll see if we can get a move up to ADR or down to ADR. So I'm not interested in getting out of anything unless it hits ADR today. All the same. Way beyond ADR in the S&P's case. So, there we go. That's everything covered. Afternoon, Reverend Insanity. Hope I had a great trip. I did. It was lovely. Although I can't say I was happy with my market results when I came back. Everything went completely crazy overload while I was on holiday in Turkey. Do you have the best practice on importing good quality historical data to MT4? Yeah, just get, don't download CSV data. Too complicated. Go and get Tick Data Suite. So Tick Data Suite basically integrates directly into MT4. And you get this little interface for Tick Data Suite. And you just go Euro US dollar from any of these brokers. I would just like their data, please. You click the button and it downloads it. Okay, so I'm just updating my, actually I need to update all these. Latest. So yeah, do that. Much easier than mucking about with all that crap. And then you can manipulate the data. You can do all sorts of stuff with it. But basically, it gives you tick data going back to 2011. and it's all integrated in MT4. So whenever I do any testing, I either click tick data, use tick data, or don't use tick data. Tick data suite is eareview.net. Those that don't know, review.net. And it costs not a lot. I pay annually £150 a year. But if you just want to do short-term testing, and this is the beauty of Tick Data Suite, if you just want to do short-term testing, just get the monthly plan, costs 26 quid, download all the data you want, and then cancel it. You just won't be able to update the data, but you'll be able to use it. I use the yearly plan because I'm constantly updating. And it's the other reason that is so good is you can't just rely on one data provider. So if you run a system parameter permutation test, a robustness test on any instrument, on any time frame, on your broker, and then you run the same test on Dukascopy data, you will get a different result. If you run that test again on Alpari data and FXCM data, you will get a different result again, because no two brokers have got the same data, and the difference between a backtest being profitable or not profitable is ticks a lot of the time. However, if the backtest that you run and the robustness test you run comes out profitable across all four of those brokers, that's robust. Yeah, if it works on your broker, Dukascopy, Alpari, and FXCM, that strategy is good. If it doesn't work on three of them and it only works on your broker, throw it away. It's useless. So I run Dukascopy, Alpari, and FXCM. Those are the three that I use. And Darwinex I've introduced. I've scrapped. Which one did I scrap? I've scrapped. I'll have to have a look which one it was. I've scrapped. Alpari I've scrapped. No, FXCM I've scrapped. So I use Alpari, Darwinex, and Dukascopy. The others haven't got as much data. Dukascopy's got more data going back further. My Darwinex only goes back to 2017. Dukascopy goes back to 2011, but 2017 gives you like 8 years worth of data. But if you want to muck about with CSV files and titting about with importing and all that sort of stuff, feel free. Not my bag. I'd rather just pay someone 150 quid and go, just give me everything. And make sure it all works in every terminal I've got installed, and I don't have to muck about. I'm all about speed. Yeah, not mucking about. Afternoon, Crom. Surely the next couple of weeks have to be down for EA given the Aussie news? Yeah. I would say so. That's where it's going. If you break today's low, that's your weekly low from Monday, from yesterday. You're selling straight into the propulsion gap, which broke that high. That's not a very good propulsion gap, though, is it? Oh, my God. Can I operate a pen? Yeah, and you need to break that propulsion gap. Once that propulsion gap's broken, that's a failed breakout. Then we should start to drop. When's the next euro rate? Fair way off, isn't it? PMIs, a couple of weeks after the PMIs. Mid-September, I guess, is it? ECB press conference, there we go, mid-September. So 12th September is the next time you're going to get news on the euro. So the market is going to assume that Lagarde is going to drop again by a quarter. So within the next 2 to 3 weeks, they'll start selling into that euro to get themselves positioned for the drop. So yeah, it should. And the Aussies have confirmed this morning there's no way they're dropping rates this year. So this is what I mean. This is what I said yesterday. I don't want to repeat everything I did in the live room yesterday, but that move there is completely nonsensical. Absolutely no reason for that. That is not fundamentals. That is market reaction, overreaction, panic. And this is the start of the panic before the real panic. Yeah, this was the start of them just going into absolute fear mode. The fear and greed indicators gone to extreme fear. They haven't released one today, have they? Because they're too scared. Where's it gone? I have to look at yesterday's. There you go. Yeah. Anything that's risky on the planet, I don't want it. What's safe at the moment? Please. Anything else risky? Yeah. US dollar, risky. They're about to go to war. Pound, risky. Going to get dragged into war with the US. NATO, risky. Mostly Europe. Going to get dragged into war with the US. Sell everything. Stock market. Don't want any stocks. Defense I'll buy, but anything else, not interested. Stick it in safe haven. Bonds. They're putting it all into bonds. Gold will probably be benefiting massively as well. Haven't looked at gold, but gold will typically benefit as well. But yeah, commodity pairs tend to stand up well during times of fear as well. And Aussie, CAD, New Zealand dollar, all commodities. You think the bottom of the daily channel on EA? I don't know. You're talking absolute nonsense, AZ. You come in here talking about channels. Channels. The daily channel. Where's the daily channel? This is the problem. I'm going to show you the problem with what you just said. Yeah. That's the daily channel. Actually, it changed yesterday to that. I don't know what it was before. That's my view of the daily channel. So I could also do that. Something like that. Maybe. Exclude that wick because it's just nonsense. Yeah. So there's my daily channels. If yours are different to mine, where's the confluence? Anybody that goes on trend lines, I have said it many times and upset many people in here many times, and I don't care if they don't come back, because the problem with trend lines is nobody on the planet draws them the same way. So how on earth can they be of any use to anybody but you? So don't ask me whether you think your daily channel is going to hold up. Do you think your daily channel is going to hold up? I don't know. What's a daily channel? I'm going to go with the 4-hour trend line. So is the question, will that bounce from there? Maybe, because there's a big propulsion gap there. But when it gets to that channel, what's going to make it bounce? The line that I've drawn, or the fundamental bias the banks and institutions have on their P&Ls at the time it hits the line that I've drawn, completely discretionary myself. What do you think is going to move the price? My line, your line, or the banks? Yeah. Just useless. Utterly useless. All indicators are useless. A trend line is an indicator drawn by you. You've created an indicator. You have created a psychological point in the market that you will be watching for a buy signal. No one else on the planet doing this, just you. Yeah. There might be a few others, but the guy sitting next to me has drawn his from there because he's using the wick of that candle, not that low. So while you're buying here, he's buying there. The banks are buying at the last propulsion move they created to add to their long position, which is just coincidentally the same point. So when it does bounce from that line, you'll be going, oh, my trend lines are brilliant. But you won't see the bank order sitting there because you haven't got that indicator. And you'll think that you're the best thing since sliced bread. The next time it fails on you, you'll be like, why are my trend lines not working? And then you'll come to the realization that every time you press the button, there are two directions price can go. And the odds of your trend line working are 50%. But buy because you buy, sell because you sell. That's what a market is, isn't it? Two people disagreeing on something, one of them buying and the other one selling them their buy. That's how markets work. I have no clue. But from pure fundamental basis, there's absolutely no reason why that shouldn't do that. There was absolutely no reason why that should do that, though, either. So don't take my opinion. I have no idea. Morning, Mayor. Mayor, morning. If anybody's got any other pairs they want to look at, let me know. So basically stuck in 3 hedges today, which is basically not wiped out my morning's profit because I've got 1,000 banked, but we're 255, 700 in the hole. So we need some ADR hits on these indices to make some money out of them this afternoon. Stuck. So plan for me this month, this week, basically, because obviously I was off all last week and the week before. So I've basically had pretty much 2 weeks off. My plan was to dive straight back in yesterday, and obviously by the time I got to the live room yesterday, the market had gone parabolic 300% of its weekly range. So yesterday I decided, no way I'm getting involved in anything until this thing's calmed down. So we did do the A-shaped recovery, which is basically a reset. So I just wanted to see what was going to happen today with the just market reaction to this. I was expecting it to be a fairly quiet day, and on the whole it has been. There's a few movers, but so from tomorrow I'm going to switch the EA back on to basically just start trading H4M15. So waiting for some decent setups. I'm also probably going to take some trades in line with bias, not using RSI. RSI has been a lot less reliable this year. And I've done a lot of back testing. If you want to go and see what the back testing was, go and watch the end of yesterday's live room. It's about 3 hours long, yesterday's live room. But the end of yesterday's live room, I went through RSI research and ADR research I've been doing over the last few days, just to confirm my thoughts on what is going on at the moment, which is basically we are not conforming to market structure as we usually do. And I just wanted to make sure that the H4M15 strategy and ADR ratios, i.e. the extensions of ADR that are used, are still valid, and they are. So all I'm doing is switching back to the original Bootcamp strategy, which is H4M15, H1M5. They're both the same thing, just using the higher time frame, which gives you stronger signals. That's literally it. And I'm going to be using RSI 10 on the 4 hour instead of RSI 14 because my research has shown that RSI 10 is a little bit more of a sweet spot than RSI 14, and it has been over the last 2 to 3 years. Although I haven't been using it, I've been using RSI 14 with no problem. But RSI 10 just gives you a few more entries. So I'm going to be using RSI 10 80/20 as my entry criteria, as the market condition, and obviously signals as usual. So, but I wanted to give today a chance to prove to me that it's not going to go nuts, and it hasn't. So I'm quite happy to start back in tomorrow, even today potentially, but we're not going to get any RSIs today, I don't think. Euro pound might hit, actually. No, it's not. Oh, it already has. That's why. Yeah. See, I mean, all these RSIs. This was extended yesterday, and obviously, it all came back down. So, just going to wait for stuff to set up there. Yeah, that's all I've got for you today, really. I've been working on another strategy at the moment as well with my friend who is using the RSI2 strategy. The RSI2 strategy is killing it. Absolutely killing it this month so far. When my terminal loads. Yeah, so I've been working on a hedging strategy for a while with him, which is actually his strategy. But I've been working on a hedging strategy to try and figure out a way to add some diversification basically into my trading. Because obviously at the moment I've just got mean reversion and stock index breakout strategies. So I wanted to try and add some hedging in, but as I've said in here before, I've never had any luck with hedging strategies personally. I've got stuck in them and I've never actually managed to make them work. But he has got something that does look pretty good, but it's very high risk, which is why I don't particularly like it. Although I'm not that risk averse, but it seems, I don't know, high risk. But it's one of the strategies that he's asked me to build him an EA for, which I've done. And I've taken that strategy and I've kind of manipulated it, if you like. What's going on with that pound CAD? That's got a buy on. So yes, yeah, it's different. So I was just looking at why I was in a long on this, because I was looking at that thinking that was a beautiful trade. But the position trader EA, the bit, just to clarify for those who don't know, there's a guy I've been working with who trades 3 strategies, and he has been for years. He's an ex-banker. He knows what he's doing. And he uses an RSI2 strategy, and I built him an EA to automate and test, not for him to use it for trading, but for him to use it for testing, to test his strategy out and do a lot of back testing, robustness testing, all the usual stuff you've got to do. His strategy closes trades end of day and only takes 1 trade a day. The position trader EA, because of the way that the logic works in it, if it gets out and the RSI2 extension from the previous day is still extended, it takes additional trades, which in backtesting, a lot of the time is incredibly beneficial. But sometimes, in this case in particular, as you can see, it took a trade there, exited a trade, the RSI2 extension was still on, so it went long. In this case, it's made a bad decision. Now, that doesn't mean it's not going to work, because we're going to get another extension, which is going to take another trade here, and this is probably going to play out. Where was I going with it? Yeah, so I was just basically talking about the RSI2 strategy. It's done 16% already this month. We're only on the 6th. So yeah, it's absolutely killing it. Done 11% week. But this is with a position trader EA, by the way. But his hedging strategy, as I say, I've been working on it with him for quite a few months now. And just tweaking it, fine-tuning it, not regularly. This is why it's taken such a long time. But I've been working on another variation of it that I want to use. So I will give you the results of that when and if it works out. But it's looking pretty good at the moment. Although, as I say, it is pretty high risk, as all hedging strategies are. You can hedge with the position trader EA. You can hedge with the market reversal alerts EA. This particular strategy doesn't use an entry criteria. It just basically buys or sells at the beginning of the day, and off it goes, which is the whole point of hedging. You don't know which way it's going, so it doesn't matter how you get in, because there is no bias. You get in, and you let the EA recover your losses if you lose, and if you win, it just takes your money for you. So, which is the whole premise of the strategy. You know, when you come from a banking background, a lot of stuff I've learned from him. When you come from a banking background, and you know how it works in the banks, you whenever I talk about indicators like RSI, it's like, yeah, you can use it, but don't use it because of the RSI. Use it because it's telling you something's happened, which has been, it's basically the banks have been selling for a couple of days, which means they've got to pop it. Yeah, that's his way of thinking. It's like, well, why don't you just buy it at X? Well, because I don't know, there's nothing that says at X, so I should be buying it. I said, well, it's a number. Just buy it there and sell it when it goes up. That's his methodology. That's the bank's methodology. This is what they do. This is what position trading is about, isn't it? Let's buy it here and see if it goes up. If it doesn't go up, let's buy it again, move the price down to there and see if it goes up. If it doesn't, let's buy it down there. Because if they've moved it all the way down there without buying any, they're going to need to buy some soon because they're going to need to make some money. And that's his basically premise on making money in the markets is you have no way of knowing what the banks and institutions are going to do. So just do something and then wait for the reaction after you've done it. If it's done that, take that money. Don't try and get that much money because you don't know if they're going to do that tomorrow. Take it. And that's his whole premise. There is no risk reward. There is no targets. There is the trade in profit? Yes. Put the money in your bank. Very, very simple, isn't it? So I love the way his strategy works, but for me, it's a little bit, I don't know. The testing looks good. This is what's making me think about it. But yeah, the variation I'm looking at running is basically adapting it to ADR because I'm obviously into ADR, as you know, and that's what I'm doing. I want to adapt what he does to be dynamic on a daily basis. So I'll let you know on that. What makes the hedging variation different? My one, I think I just preempted your question. Mine uses ADR. So that's basically it, yeah. Just a variation that is based more on logic, if you like, rather than a bit difficult to explain. Rather than price movement at the end of the day is all it is. There's no where we would look at that, yeah, and go, well, that's a good sell point, and it works beautifully. He won't look at anything like that because the number makes no sense to him. Yeah, because he knows what they do is they buy and sell at price points. And these little price points are just where a button has been pressed, an execution has been made. But the price point is this. Yeah, which is why everybody finds it so hard to make systems and strategies work, because they'll be trying to get in at a level, a point, a reading. The banks aren't doing it on a daily basis. They're doing it over a period of time until they've executed what they need to execute, and then they move the market. Whereas when I say to him, but, you know, it needs to move here because of X or Y, he's like, no, it doesn't need to move here because of X or Y. Because if the bank doesn't need that, it won't do it. Whereas you and I are always looking for excuses and reasons for something to happen. It's not the way it works in a bank. The bank's got a pile of orders that they need to execute, and they go through them pressing the buttons. Yeah. How can you possibly have anything that could historically repeat? Because the pile of paper that comes through every day, they don't have paper, obviously, but think about it from an order book perspective. They have orders coming through every day, and every day the orders are different. So if the numbers are different every day, how could you possibly get the same movement any day? You can't, which is what I keep going on about. There is no 2 days in this instrument that will ever be repeated. They've never been repeated in the past, and you'll never get it repeated again. The move that we saw in the last 24 hours has never happened, ever. It won't repeat itself, ever. The order of those candlesticks, the size of those candlesticks, the high, the low, and everything that's happened over the last 48 hours is never going to happen again in the past. In the future, hasn't happened in the past. So if you backtest what's best to do in this scenario, you're backtesting on what would have been good if you'd had a time machine. You haven't got one. So what's the point? Flip a coin. Same odds. Right now, up here, there's an M pattern reversal going, which he laughs at. Because it's not that's not what they do. They don't look at it like that. But there's an M pattern reversal going on right here. Yeah. If you sell that, assuming that's the right leg of an M pattern reversal, the odds are just 50% of up and down. That's it. Just because you call it an M pattern reversal, the market goes, I've got a load more buys to do. Off it goes. Just because you've seen it do that 100 times doesn't mean it's not going to do that this time. So none of that, none of this, any use. Good, isn't it? And I use all of this stuff and make money out of it. Just goes to show how much of this is, like we're talking about AZ with your trend lines, yeah? If you buy on a trend line, you haven't made profit on that trade if it works because of your trend line. You've made profit because you've coincidentally got the 50-50 right at the same time as the bank's pressed a button. Literally it, isn't it? Anyway, but yeah, I'll talk through the hedging strategy when I've got it to where I want it for testing. Just looking at this, drawing this on the chart because I'm psychologically talking myself into shorting the euro pound at the moment. It's really good. But I want to get it to a point where I can get a good robustness test across multiple pairs. The problem I'm finding at the moment is every now and again it blows an account because there is a problem with the strategy. Because I'm trying to automate it and I'm not using this, which is what he does. What you're saying is why I've decided to move to bottom trading mode. Bottom trading mode just take trades I like the look of. I don't understand that. What you're saying is why I've decided to move to bottom trading mode. I don't know what bottom trading mode is, AZ. Just take trades I like the look of. Yeah. This is the whole problem with everybody, isn't it, in trading? We are all trying to find the holy grail. It doesn't exist. Oh, button trading mode. Right, got you. Bottom trading mode. I was like, what? Yeah. So, prime example. We got this on the chart. Yeah. High, low, high, low, high, low, high, low. Propulsion gap, retest, M pattern reversal, right leg, extended, RSI, divergence, hit the button. Right? All of that analysis I've just done causes me to press either that or that. Yeah. Doesn't matter whether you agree or disagree with that analysis. Doesn't matter whether you have an indicator that says you should be buying it now. It doesn't matter what you think, what anybody else thinks, how many forums think something, or how many signals you get from a bloke you've paid 100 quid to. Yeah, that is moving up or down for no other reason than the volume of bank orders that go through this afternoon. That's it. Yeah, we can see patterns repeat themselves over and over again. But the pattern has a same chance of working every time. When this pushed down and pushed up to here, it pushed down to there. It could have done that. It could have done that. So it could have been a W pattern reversal, or it could have been the second leg in a downtrend. That point there, everybody was making a decision, long or short. There is no indicator on the planet that can help you make that decision. Every time we get to a propulsion gap, it will, or I'm just trying to find the propulsion gap that doesn't work now, which is quite hard to do, isn't it? Think about it. It is quite hard because they do work all the time, but not all the time. But there's a propulsion gap. You got down to that one, you bought it. Crap. Didn't work. But that propulsion gap is no different to that propulsion gap, which worked perfectly there and failed there. Yeah. The volume of orders at that candlestick on that day are different to that candlestick and that day. The bias the banks had at that point and that point is different at that point. That is why the market's moved up and down. It's got nothing to do with anything else. This thing has got absolutely no bearing on it whatsoever. All this is measuring is, holy crap, the bank's been buying for a long time. We know that after they've been buying for a long time, they usually then sell it. But sometimes they don't. 50-50 every time. Doesn't matter what you use. Fundamentals. Fundamentals are that at the moment. But fundamentals mean nothing. Everyone's short in the euro. No, they're not. I can guarantee they're not short in the euro for the last 48 hours. But you watch the banks put it back down there in the next 3 weeks because they are short in the euro. Just not for the last 48 hours. So for the last 48 hours, your strategy's failed because you're using fundamentals. Whatever you use is irrelevant. And I've said it many times. You can flip a coin. and still make money in this market by just changing the price of your entry. But you just got to obviously be careful with it. Anyway, that's all I got for today. So I'm going to be working on the hedging strategy over the next few days. I feel like I'm hitting my head against a brick wall a little bit with it, but I will get there. Tomorrow, live room is at 8 o'clock. 8 o'clock. We'll have a look through all the FX pairs and just see what is setting up at the moment. So there's quite obviously a lot of volatility, which is starting to fizzle out now. So obviously when you get a move like that, if you get an accumulation or a flag, it could go either way. So we'll go through all the pairs, look at levels, look at the fundamentals. Anybody taking that euro pound short? Good trade. Yeah, we'll have a look at what everything, what is setting up for where, and obviously see if there's any new positions to get into. So I will be resetting the EA tomorrow, assuming this market doesn't go nuts. We've got nothing to look forward to tonight. Tomorrow. Overnight, we've got obviously the rates on the New Zealand dollar, so expect to find a fair bit of ADR hits on the Aussies and the New Zealand overnight. But tomorrow is a no news day. So all these moves that we've had put in over the last 24 hours, I think there's a strong chance of continuation moves starting tomorrow, either up or down. So we might see some volatility coming in. The rest of this week is unemployment claims and the Canadian unemployment rate, which again is forecast to go up, which is going to drive the Canadian down. So yeah, not a lot else news-wise this week. It's a bit of a dud one. Next week is CPI week. So we've got a lot of CPI, unemployment rates, GDP, everything next week. So it's all going to kick off a little bit more next week. So, all right. So I'll be back tomorrow at same time at 8 o'clock in the morning, if you were here yesterday. And then back to usual schedule now for the rest of this week and for the foreseeable. All right. So anything you need, let me know. I'll be in Telegram or Discord. And yeah, if you're in these hedges, yeah, not a lot we can do with these today. Just hope the market actually manages to make a move. We're just testing high on the Dow at the moment. So if we get a breakout of this high, there's a good chance we're going to find some resistance up there at ADR. Good opportunity for shorts. All right, have a good one. Anything you need, let me know. Otherwise, I will see you next stream. Have a good day.